So with retirement accounts, there's this thing called a Roth conversion, and it's usually used in two different ways, either for a backdoor Roth IRA or for a Roth conversion. A typical Roth conversion is where you take money from a traditional IRA or 401k and you transfer it over to a Roth IRA or 401k. This transfer is a taxable event, meaning you're going to pay taxes on any of the money that you convert over to the Roth IRA in the year you convert it. And to make matters worse, you have to pay those taxes with other money. You can't use the money in the IRA to pay them. But once you've rolled the money over into the Roth account, it's going to grow tax-free and it's going to come out tax-free as long as you wait 5 years after you made the conversion. So if you're going to pay taxes this year with different money, why in the world would you do a Roth conversion? Well, you typically do it in really low income years because then you can make that conversion at a low tax bracket. So let's say you saved money into your traditional 401k when your tax bracket was 24%, meaning you got a 24% deduction on everything you put in there. But now you have a really low income year and you're in the 12% tax bracket. Well, you can convert that money over, pay the 12%, but you still saved 12% thanks to tax arbitrage. Plus, you guarantee the tax rate that you're going to pay on the money that you convert. This is generally why people do Roth conversions, is because when they retire or when they start getting Social Security or dealing with required minimum distributions, they kind of lose control of their tax bracket. So if you have a year where you know what your tax bracket is going to be, it's a great moment to do a Roth conversion because you know exactly what you will pay. Now, a backdoor Roth is still technically a Roth conversion. It's the same idea, it's just used for a different function. You would do a backdoor Roth if you make too much money to contribute to a Roth IRA the normal way. To do the backdoor Roth, you would put money into a traditional IRA after tax. It's called a non-deductible contribution, and then you would immediately convert that balance over into your Roth IRA. Doing the backdoor Roth isn't going to save you taxes, and it's not going to cost you any extra taxes as long as you make the conversion immediately. It's just another way to contribute to a Roth IRA for people who are over the income limits.